So built to last, bigger, better, stronger. So I'm actually going to start with just a few, setting the scenes with some headline news. We'll go through a few numbers a little bit deeper as we go into the presentation. But some headline news, Q1 so far this 2023, very, very strong performance throughout. So sales up 42% over last year. This is inclusive of our international business. Talking of international business now represents in Q1 over 17% of our overall business. That number is growing daily, I'm very pleased to see. Our gross margin, just shy of record quarter numbers, but 49.2%, and you'll see how that very importantly flows through to the bottom line. Tremendous work there from our merchants to make sure that we buy the right products and sell at the right prices. Flowing down, inventory, well positioned, up 22%. This again was at the end of Q1, so just before the big Paparan selling period. So we were very well positioned from an inventory perspective, and we continue to be well positioned for our sustainable growth. And that all resulted in some very, very strong numbers. EBIT margins of 13.5% was a 58% increase year on year. And net income, a very, very solid start to the year, 276 billion in Q1. Q1 historically is not the strongest quarter, but this is a very, very strong number. It's a 62% increase on the prior year. So just a brief look at our story. Mr. Sharma stole a lot of my thunder on awards, but that's okay, because I can. It's from our humble beginnings in 1995, I want to really move you towards the right-hand side, which again, from 2022 onwards, our expansion into Singapore and Malaysia, opening up there. And again, seems as we come out of COVID, there's been a deluge of awards bestowed upon my team. So congratulations again to everybody in Map Aktif for winning those awards. Our brand portfolio, again, we've split it up into three areas: sports, fashion, footwear, and kids. Some real global powerhouses here throughout, whether it's multi-branded, from Foot Locker, our own proprietary Planet Sports, Sports Station, Golf House. But then really when we look at some of the engine, the powerhouses of our business, Skechers, you see there down in the bottom left. This is in alphabetical order, so there's no priorities there. Skechers number one, Converse, second biggest brand, New Balance number three. And then we also have a plethora of world-class brands there. Very, very on-trend brands such as Crocs and Hockey Oni. Moving into our leisure fashion footwear brands, recent addition, Aldo to the family. Great to have them on board. And again, you see there a complement of brands, Global Best, Steve Madden's, Birkenstocks, Dr. Martens, etc., etc. And then finally, very importantly, our kids business, kids toys and clothing. Our own proprietary kids station is the backbone of the business there. But now very pleased to say that we are accelerating our own Lego concept stores. I think we just opened our 12th or 13th. 12th, Miguel's nodding, so very well done there, as we accelerate that incredibly exciting Lego store concept throughout Indonesia. So our ASEAN goals that we use to make sure that we can achieve all our numbers, again, in line here with Mr. Sharma went through from the MAP, unifying retail experiences, accelerating our regional branded commerce. That really is our number one initiative for us here for Map Aktif. Driving that digital and technology change, and we'll give some examples of that in a minute. And of course, continuing to build on our strategic partnerships and acquisitions. As we have come out of COVID, it is clear that more and more global brands are looking to Map Aktif to be that custodian of their brand throughout all of Southeast Asia. So unifying, I won't spend a couple of minutes on these, unifying our retail experiences. Here you see how Skechers comes to life 24 hours a day, online, offline. Skechers appears in our stores, Skechers appears on Planet Sports, Skechers appears on our chat and buy catalogs, Skechers appears on Skechers.id, Skechers appears there on our Map Club, and we also have Skechers on marketplaces throughout Indonesia. So that's really how we're giving the customer what they want, when they want it. Moving on to our brand e-commerce, this is a snapshot. I apologize, probably some of these numbers have changed already as they rapidly change by day, whether that's acquiring new brands or opening new stores. But as Mr. Sharma said, Indonesia is still our powerhouse, and for quite a few years to come. Over 1,200 stores, we continue to accelerate our store openings in Indonesia, and we continue to acquire exclusive brands. But then you see new countries come along. Philippines being our second biggest there, but we're also in growth mode, Vietnam, Thailand, and Singapore and Malaysia as we've acquired new brands. Cambodia is the latest new country that we have moved into, but it wasn't in Q1, it was in Q2. Okay, moving along, this is how our brands start to show up. You see here, Converse, a great example. 5 out of the 7 countries that we operate in, we operate Converse exclusively. And exclusively, whether that's in stores, in malls, or online. And then you see there as well, from a social media perspective, we bring everything together in one ecosystem. Technology, Mr. Sharma touched on most of these. Do want to really highlight Endless Aisle. Endless Aisle is a great tool for us to give the customers what they want when they want it. What do I mean by that? Basically, that enables our store staff to be able to find that product for that customer, whether it's in their own store first, through looking up whether it's in the back room, whether it is, if it's not in the back room, is it in a nearby store in the mall? Is it in a nearby store in the town? Is it online? Is it in the warehouse? This system enables us to track and find that product for that customer. We will then give that customer the options from the last mile from a delivery perspective to they can either get the product sent to the store, they're sent to their home. If they want, if it's close by, they can go and get it themselves, or we can offer grab and Gojek to come and grab the product and bring it for them. So again, multitude of offerings to make sure that the customer is satisfied, which is our main objective. From the back end, very excited about this from a new technology perspective. So we are investing in a new merchandise planning tool. We are partnering with Blue Yonder, global best practice company in market planning, and Infosys, who will be helping us piece everything together. But this really will give us a streamlined, automated solution, which will help drive efficiency and ultimately sales growth. We'll be sharpening our focus for delivering our goals, operational effectiveness, predictive, proactive, and agile planning. These are all tools and benefits that will help our overall business going forward. Benefits you see there, reduction of in-out stock rates, improved inventory availability at store level, making sure the product is where the customer wants it, when the customer wants it. Obviously, increased store sales and improved allocation accuracy. So we're very excited about this new tool. It's in its implementation mode at the moment, and we'll probably go into full live mode towards the back of the year as we do multiple testings throughout. Strategic acquisitions, as I said, as we've come out of COVID, there doesn't seem to be a week goes by where more and more global brand partners are looking for us to be that custodian, looking for Map Aktif to drive a consolidated Southeast Asia approach for their brand. So some examples there that Ms. Sharma already mentioned. Foot Locker, in about 10 days' time, we take over Foot Locker's current operations in Singapore and Malaysia. They are very strong operations, so we're very proud to be taking over those. And again, new partnerships, as we've already mentioned, Converse and Reebok last year, Aldo now operating in 4 countries. We're very, very pleased to be a partner and a custodian of the Aldo brand. And again, just last week, a press release come out about our joint venture with Sports Direct. Sports Direct are the global leading sporting goods, premium sporting goods brand throughout the world, primarily in the UK, but now also heavily based in Europe, based in Malaysia, and we're very pleased to be partnering with them now in Indonesia. Okay, just a brief summary here. As we said, we've been accelerating our growth of stores throughout all of Southeast Asia. So there you see just where we finished last year, 1327. We're already at 1420. This is net, because obviously we also have been some closing non-productive stores. And then you look at the new store counts there again, heavily investing, continued to invest in Indonesia, strong growth coming out of the Philippines. And also, again, as Mr. Sharma said, we are looking at each and every country in an entrepreneurial way to make sure that we are in the right locations for the consumer. Some pictures here of some of our multi-brands. Again, these are all stores that opened in Q1 this year. So multi-brands, whether that's Planet Sports, new sports station concepts, and new golf houses. Looking at some mono-brand stores here, particularly here in Indonesia, but also in Philippines, Singapore, and Malaysia. So great to see we're opening now across all of Southeast Asia. Foot Locker, some major new projects in Foot Locker, whether that's in Indonesia, as Mr. Sharma mentioned, but then also in the Philippines. Just this coming week, we'll be opening a new store in the Philippines and a new store in Indonesia as we really ramp up our store openings with this great brand. So look at the highlights. So these are the financial highlights Q1 of this year. Sales coming in at 2.7 trillion. As I mentioned, that's a 42% increase on last year. Tremendous gross margin number of 49.2 versus last year's 45.6. Last year, if you recall, in February, we did have some closures due to the Omicron. Some of the malls had restricted hours, so we were a little bit more promotional for the 45.6, but the 49.2 is an exceptional number, as are the other numbers below. So all the way down to net profit, 276 billion, which is a 62% increase on the prior year at a 10.1% rate. So well positioned to accelerate and hit our targets for the remainder of the year. You see how this how the growth goes from prior years. As we came out of COVID in 2022, a very strong 50% increase on the prior year, and then another 42% on top of that 50%. So well and truly surpassing numbers from 2019. I think if you do the math, it's about 70%. Profitability, again, strong numbers throughout. Very strong gross margin numbers, really supporting the flow through to the bottom line. Good expense control throughout. Obviously, we are in growth mode in our international countries, but we remain very stringent on our expense control to make sure that we flow as much as possible down. So again, 2022, we finished at a very strong 23%. And in Q1 alone, we're at a 20.2%. So again, well positioned for the remainder of the year. Inventory levels, again, equally well positioned. Our aging throughout, and this is including all our international countries, is at 20%. So again, freshness, exactly what the customer wants to buy and see in our stores is highly prevalent there at 80%, is younger than 6 months. And again, our inventory days at 161. And again, I will say that this was just prior to Lebaran. So we were building inventory for that very, very important period. and it was still at 161 days. So very good position to be in moving forward as well. And lastly, our balance sheet in the good situation. So again, cash and equivalents there, just over $1 trillion. And if you go to the right side, you'll see our bank loans now. It's 93 billion. So as Mr. Sharma already alluded to in the MAP presentation, we're in a very strong position throughout. So all in all, we continue to work to our mantra: bigger, better, stronger. Bigger, partnering throughout Southeast Asia with the global best-in-class brands in all our areas of business. Better, a company who global brands continue to trust to deliver on commitments and strategies. And stronger, a brand of strength, a brand that is well positioned for sustainable growth throughout the entire region. So thank you very much. That's the end of my presentation.